Hey everyone, welcome to another episode of the Orita Podcast. I'm Aaron Schwartz, one of the co-founders of Orita. We do AI customer segmentation, and I think that's about all you're going to hear about Orita on today's discussion. I'm here with Fanbai, who is just an awesome operator. I reached out to him maybe a month ago because I've seen his content forever and ever on LinkedIn, and there are a couple people who are just really sharp, really go deep, and I just kind of fanboyed out and suckered him into one call, and then I suckered him into joining us today. So I'm going to let him introduce himself because his background is pretty incredible. And thanks for joining, and please introduce yourself.
Yeah, the way I guess this is going, Aaron, from first call to then podcast recording, by next week, I'll be minding your kids.
Yeah. We'd like you to invest in Orita at a very high valuation and babysit my children. Thank you.
Yeah. So being in e-commerce for around 15 years, and digitally native e-commerce more than marketplaces. First 10 or so as an operator, which is kind of how Aaron and I first connected. And then last 5 or so as investor, operator, advisor, with a particular focus on capitalized businesses. So VC backed, sometimes PE backed, that were growing, that are no longer growing and need some reset in expectations.
I want to start with a little bit of context because you're an operator. You know, I knew Blank Label because my first brand was a watch company that was print on demand, and we turned into a marketplace, and we kind of did all sorts of stuff. Can you give a little context about what Blank Label was, how you guys founded it, and what the business ultimately became?
Yeah, absolutely. So started doing custom shirts online. To be very honest, like if I went to the beginning, I was a hammer looking for a nail, wanted to get into startups, wanted to start a business, but wasn't technical. And so e-commerce was the most kind of technical business that I could run, wanting to be a wannabe tech entrepreneur. And was in Boston and kind of had that whole ecosystem going. And so that was the inspiration for it. And I'd been to Asia, worked in professional services, had done the kind of Asian custom experience. So I thought there was a way to bring that online, make custom shirts, suits more accessible. And so started doing shirts online. We then opened a handful of retail stores over the years. And the business ultimately got sold a few years ago to a manufacturer. Yeah. Incredibly interesting experience, which, happy to go into more, but definitely kind of learned the chops.
I think we didn't actually discuss the founding before, but my first business was a sustainability business, and it was for MBAs, zero technical ability. And I was very much that hammer looking for a nail. So I appreciate how you just kind of walk through that. Yeah, I think a lot of the insights you have from the Blank Label experience will come out throughout this discussion, but how did you decide to make the pivot into what's become Hedgehog?
Yeah, I think, look, the Blank Label journey was a long journey. It was a hard journey, and glad that it landed at a home and the business today continues. In fact, I had an old customer reach out recently that kind of spoke fondly of the experience. But toward the tail end of that journey, wanted to move on from and wanted to sell the business. We had medium scale, and we also Blank Label grew up in a time where, for the first few years, Bonobos was the kind of poster child of not only kind of apparel, but e-commerce. I think Andy Dunn did so much for, I think in all reality, Toby at Shopify should give Andy Dunn some Shopify stock for inspiring so many e-commerce entrepreneurs. And I certainly looked up to him. But one of the things that Bonobos did was it always kind of positioned itself as a tech startup, and with minimum kind of 3 to 5x revenue multiples. And so that was just the the valuation model that we looked at our business through. But when we started having conversations with brokers and bankers at our scale, they were like, no, that's fantasy land. This is not where businesses trade. And yes, are there a couple of headline strategic deals a year that get a massive premium to market? Sure. You're not as of that scale and you don't have a lottery ticket. And I was like, okay, so what does that mean then? Like normalized market businesses sub 50 million in scale trade on a profitability multiple. And at the time I was like, but we're not really profitable. So how do we transact? And they're like, yeah, that's a good question. The answer is that you don't really.
Yeah, you do not transact unless you're profitable as that brand. So for you guys though, at Hedgehog, right, you're looking at not yet profitable, not hyper growth D2C brands. Are these brands that have been around for a year, for 5 years, for 15 years? It's the burned out founder like I was with my consumer brand. It's the blank labels, or what are kind of the characteristics that you're looking for?
Yeah. So to continue that story, I was like, well, how come, am I the only one that doesn't know this? So, I talked to the other founders that had been building their businesses, my other peers and friends in industry, and we're like, hey, so like, you're thinking about selling your business in the next couple of years. Like, do you know that you're not going to sell for 3x revenue? And they're like, no, like, I think we will. And I was like, no, I don't think you are. Have you validated this thesis? Or this hypothesis, rather? So, yeah, I think we realized there was this broader misunderstanding, to be honest, which I think still exists today, that subscale businesses trade on a profitability basis. And so we tried to turn that realization and say, well, inside Blank Label and inside some of our friends' businesses, there is a good profitable business. Maybe there's some overinvestment in sales and marketing. Maybe there's some overinvestment in team and infrastructure. But can we find the profitable business inside of this not yet profitable business, let that kind of stabilize and normalize, and can we create value that way?
Will you look at each business on its own merits? Will you look at, hey, this is a nice attach to a different business that already serves this market? How do you consider the whole portfolio of Hedgehog companies?
We certainly started with a platform thesis. This was also during a time where the platform thesis in e-commerce was much trendier and was, attracted more capital. We found the platform thesis to be very challenging, and happy to go into why that was. And but I think it makes much more sense as have to underwrite each individual business on its own merits without kind of cross-portfolio synergies, and can it be profitable as a standalone business?
When you're inspecting these businesses, right, and each one kind of standalone, can you kind of walk through the playbook? I mean, not looking for any state secrets, but high level. Introduce you to a friend, they've got a $10 million top line business, some break even or nearby, whatever it is, but it's a real business with a real customer base. What are the next couple things that you're looking at to decide if you think about it as like a gate to move forward to like deeper diligence?
Yeah. Really trying to understand the unit economics of the business, which is not rocket science. Like, anyone on this call could do this.
You're giving me
Looking
a
for
little bit more credit than I deserve, but I appreciate it.
looking for, so I'll kind of walk through it and then also share some of the missteps. So looking for fully loaded gross margin after sales, after shipping and fulfillment, ideally need that to be north of 45%, which I would say, finger in the air, probably less than 50%, maybe less than 40% of businesses pass. And then looking for post-marketing margin, typically referred to as contribution margin, north of 25%. So if you're taking 45% gross margin, you're spending 20% on marketing, 25% post-marketing contribution. That's kind of it's really that post-marketing contribution that we're looking at. And then we've had some misses on larger, like, one-time transaction businesses. So it really needs to have some repeat behavior. And I'm not talking about like, oh, I bought this couch, I might in year 7 need a second couch, but like, it needs to have some 12-month, ideally even 6-month repeat behavior, and so that you can monetize the customer base. And then I'd say the third thing is probably operational complexity. If you're dealing with you need to buy products from 15 different places, then it needs to go to 3 different co-men, it needs to then go to 2 different warehouses, and then you're selling those 2 different warehouses need to send it into 3 different channels. That gets tough. Operational complexity means you need more heads, which impacts your P&L. It means that you need more inventory, which makes it harder to manage working capital. So yeah, margin profile, repeat customers, and operational complexity.
All right. So you hired me on this call. It's incredible. And you've given me this talking to about how to help you even vet the first dozen companies that I'm looking at. Where are the places where you, given your background, given your network of agencies you can pull in or fulfillment houses or just kind of having seen it and done it are willing to break the rules. Like I think I'm trying to figure out what are the mistakes that a lot of brands are making, where if they just had an excellent operator, they'd be able to move their margin up a meaningful amount.
Yeah. So I referenced earlier, there were a couple of missteps. The first one is just the chart of accounts, and not to get too boring here, but you look at 10 different e-commerce businesses selling clothing, like the standard deviation of how they organize their accounts is actually pretty broad. Some people put shipping and fulfillment in, like we've seen like shipping and fulfillment even in operating costs. Like, people measure gross margin differently. Where do you put merchant fees? So there are different, and so some people say like, oh, we pass your 45%. We have 45% gross margin. We're like, well, actually, your shipping and fulfillment's like modeled up. You've got shipping on the one above the line, but then you do in-house fulfillment, and so you're putting that in OpEx, but it really should be moved up to your variable costs. And like, actually, if you do your fully loaded gross margin, it's only now 36%, and that doesn't leave a lot of room. So fully understanding that. The second part, to answer your question of like, I wouldn't there are a lot of smart operators that we buy from. There's so much information out there. You've got this podcast. But a lot of it is just also expectation setting. Like I think not all, but most founders are building their businesses with a high growth mindset. And high growth is just really expensive. It's really hard, leaves less margin for error. And so for us, we just try to move that out. We're like, what happens if this business didn't grow for the next 3 years? Is there a nice profitable business inside here? And that's just a really different view.
I love that perspective. I mean, it's useful. Again, it's been a while since I've been that brand operator, but obviously from running a tech company in this market where investors expect 1 to 100 within 2 years, nobody's thinking about retained revenue or anything else, right? And like, are the customers going to stick around? And trying to operate efficiently and just really increase that baseline. So that very much resonates. One of the things that we see, right? So we are very much focused on the retention side of the house. You have a 1 million customer list. How do I increase your LTV of that 1 million customers? Is a lot of brands who are spending wildly on growth, right? Obviously in the last couple of years it's tapered, but it feels like even at the beginning of this year, it tapered even more. And so brands are trying to get more out of their existing customer base compared, again, relatively historically about what percentage of their sales might be coming from new customers. When you're inspecting businesses or kind of jumping right in, how much of it is looking at their acquisition strategy versus their retention strategy, trying to find that right blend?
Yeah, I alluded to this a little bit earlier, but like we think that there are a lot of good operators out there, and candidly, I'm not sure that we're at the tip of the spear either. And so like, again, that difference between improvements that we can make purely from an operational standpoint, I wouldn't say, I wouldn't bet the house on it. It's really that reset of expectations. It's understanding the financial picture of the business. And yeah, sure, are there some things that we'll implement as best practices across the marketing, operations, and finance stack? Sure. Some of those might just be like a difference in opinion. But again, I would say that most of the operators that are hitting our desk are doing a decent job. And
well, one of the things that you said previously is like distress is usually a liquidity mismatch, which I think is such a very clever phrase. And so how I'm interpreting a lot of what you're saying is these are actually good businesses with good operators. They just thought they were worth 30 million and they're really worth 10. And the ability to get to 30 is probably like 7 years away. So instead of continuing to fight for this valuation that they thought they would get, sometimes it's better to just sell a business, get a good win, move on to the next thing, or keep operating, whatever it is. Is that a good interpretation of the situation?
Yeah. Yes. And I would maybe just say like, instead of the valuation, the 10 or the 30, more just kind of from a revenue scale, like this is, there's maybe more of a limited TAM, or the meta marketplace can only handle so many customers for this brand. So, there's definitely this, the efficient frontier, and they're kind of not, they're way past the efficient frontier because they're trying to grow to that $30 million in revenue, whereas they could just be an efficient $10 million business. and be doing $1 to $2 million in profit. But because they're trying to grow from 8 to 15 to 30, what it instead looks like is it's a $10 million business losing $4 million a year. Now they want to go out to their next round and they want to say, hey, we want to get to 20 next year. But the investors are like, but you're losing $4 million a year. And they're like, well, we're trying to grow. They're kind of stuck in this tight spot.
Is there a number? I bring you a brand and they're at 30 million, 50 million, 100 million in revenue. What is the number where you're like, okay, there's actually the opportunity to theoretically reinvest because there's a shot at becoming that big company? Like, where's the gap that founders assume maybe like 5 or 10 million is like amazing, but it's really, you want to be at 40 or 50 before you actually have something? What would that number be to you?
Yeah, I would say that like we spend most of our time and probably feel most comfortable in that small to lower mid market, that $5 to $50 million revenue range. I think to better answer your question, perhaps though, is like you're like, where do you get a leap in enterprise value?
Thank you. Much better. You are good at this. That's exactly what my question was.
And the reality is that the strategics have continued to move up market. And so most of the deal transactions, you were maybe seeing more deal transactions in the like $50 to $100 million revenue range 5, certainly 8 years ago. I think strategics have continued to move up market looking for the like multi-$100 million revenue business that's still growing, that's now probably got some operating leverage and is profitable. So the goalposts have definitely moved up market, which unfortunately means that it's increasingly tough for the smaller brands. And the antidote certainly is just to be a small, profitable business.
When you're acquiring a business, or whether you acquire it or not, but you're inspecting the business, are you thinking, okay, cool, we can get to profitability and then we can keep growing over time? Or is it you actually think, look, given the marketplace and customer preferences, we think this business has its runway for 5 or 7 years and we're modeling like that?
Yeah, much shorter duration. I think that it's so competitive. Brands are falling in and out of product market fit faster than ever. And so our view is much more fix it and let someone else that's specialized in that space hopefully go and realize the rest of the value and continue to grow it. And so historically, buyers of the brands have been in that brand ecosystem, competitor, supplier, distributor, manufacturer, whereas we're kind of more horizontal in category.
I love it. That's really fascinating. All right, you mentioned platform a couple times, so I need to stick around there. What were the assumptions you had that you'd be able to platformize? Like, hey, we've got this common tech stack, like a open store approach, or we got these skills that we're gonna do shared services. What were the assumptions you had? And then really, what are the things that you actually think do work from a platform perspective, even if it's only a couple?
Yeah. I think the two biggest things that we underwrote in the platform strategy, by far the biggest was operating team, that we thought, hey, you could run half a dozen, I think at our peak, 10 brands. This was a few years ago now. On the same operating team, you need 10 for 10 brands. You need 10 retention marketers, or can you spread, 2 retention marketers and run kind of more of an agency model? So we did this for every function. We were mostly in fashion and apparel accessories. And so we thought, new product development, sourcing, all of that could be horizontal. And as we both know, some of the rub against some of our agency friends is that you have all these very distracted operators running across multiple brands, and you're often spending as much time on comms management as you are on doing the work. So we certainly suffered from that. And after a couple of years, realized that it wasn't working. The second thing that we underwrote as a synergy, but to a lesser extent, was that we thought we could get value sharing customer files across the brands. Again, kind of more or less similar demos, the same demo that everyone targets of affluent millennial, and really got no uplift from that. So yeah, they were the two big things. To answer your question of like, what do we, I think you get some shared institutional learnings, but from kind of real synergies that you can pencil into a model, I think really bearish.
Are there any technologies, like, is every brand a Shopify brand? Does everybody use a Klaviyo or a Yapo or like, are there any techs where, you know, the job to be done is the job to be done, but they're kind of standbys that you assume companies should be using?
Yeah, we moved everyone onto the same kind of, unified, all the ones that you mentioned, the Gorgeouses, put everyone on the same ERP. Then even the kind of migrate, like, especially in that 2-year window when we were doing a lot of M&A and ingestion, even doing migrations from a MailChimp to a Klaviyo, it is taxing and time consuming when you've got all these other things going on.
All right, I want to stay on the brands for a minute. You talk about zombie brands. What's your definition of a zombie brand? I feel like you've kind of hinted at it so far.
Yeah, I mean, I think if I had to give you a definition of zombie brand, it's one where the common equity is out of the money today for sure and may never be in the money again.
Shit it. I love how concise it is. When so my brand, we ran for 7 years. We scaled very quickly. I could give you 1,000 mistakes, but it was ultimately too many channels that we were really good in, nothing that we were exceptional at. And so we were just spread too thin, all the mistakes an early founder makes. But I held on for 2 or 3 years because I owned so much of the company. And if I could just get beyond the pref stack, and even if it was just like selling for $1 million more, it was a life-changing amount of money for me. It wasn't like, hey, we're going to become a billionaire type of thing. And I mean, literally, I think I spent 2 or 3 extra years to the point where all of our investors like, dude, shut down the company. I was like, no, I can make this happen. I got this. All that to say, it is extremely difficult when you've lived and breathed a business, like any passion, to be like, oh, maybe I'm not that good at it, or we're not going to make it.
Yeah, that number certainly even slides down it over time of the like what I need from this. And yeah, very in tune with that founder psychology of like, you start expecting or targeting like a 9-figure, $100 million plus exit. Then 3 or 4 years in, you're like, well, 30 would be really nice. And then like a couple more years, you're like, well, there's the pref stack. Now I've got a senior note. But $5 million is still life-changing money. Like, yeah, even at 1 times revenue, I think I can clear everything, or maybe next year we can clear it, right? Like, I can get my 5 million, and now I've been doing it for a while, so I'll get the QSBS treatment, and then 2 more years go by. You're like, well, I've already been in it for 7 years. If I could just get $1 million, that makes the whole thing justified.
This is literally where my gray hair comes from. I will say, the end was, and I negotiated for this, I need to clear my credit card bill because I had gone without salary. I'd lent the company money. And I was just like, just let it be above what I owe right now on credit card. And I'm so happy in that. Yeah. So that slide happens. Anyway, guys, start brands. You'll love it. It is funny because the only, running a company right now, and I've invested in a lot of startups and public equities and everything. I no longer really invest much. The only like individual stock that I own is Shopify because I'm obviously such a big believer in the ecosystem as you and I are talking about how hard it is to build, but it makes sense. It's been easier than ever. Now the supply side is easier than ever. And there's so much innovation on acquisition and dot. All right. I'm going to ask you about AI, and I'm really sorry. You don't actually need to talk about AI, but think about it much more like requests for startups or what are the biggest jobs to be done? What's kind of changed in the last 6 months or a year as you're operating? Forget acquiring them, right? You're now operating a bunch of, or seeing these businesses, and even the ones where you aren't the operator, you know a ton of people, right, who are running businesses. Are there any big shifts that you're seeing, like more specifically than just saying like, yeah, AI matters?
I would say that it hasn't, if we look back to what we're near end of 25, like started to really come in vogue early 24, let's say, where it was on everyone's mind and what are the applications of this for e-commerce businesses. I would say if we were to audit that decision, 18 months ago, I think most people have been underwhelmed that it hasn't come through the application layer as much. Not everyone is Shopify Sidekick isn't just running all of our businesses, and that I still see both as a customer and customer of other brands and operator, like still see regular mistakes in customer service AI, or it's not quite there. So yeah, I don't know that I actually have that many good stories yet of, hey, this vision of we're now all craftspeople and thinking about product and messaging and getting back to that creative work and all the operational stuff, or your accounting, or your purchase order to port to fulfillment center to customers, all just happens in the background. That's kind of vision that some people have. I don't think that we're actually anywhere closer to that.
It's interesting to hear because you're obviously deep in this. One of the things that I feel like I'm seeing the pattern from really good operators is it's not replacing everything. It is accelerating. I had a conversation with Joe Gulo from Thursday Boots, but previously Jet.com, Glossier, like knows inside and out of supply chain. And one of the things that came out was just his ability to self-serve with tools for the analyses that he wants to do and then set it up so he gets the analysis. I'm making up exactly what he said, but once a week in advance of the meeting, yada, yada. And I think that is amazing. And it still relies on Joe being an expert who's seen 1,000 things and knows, like everybody has data. It's not like we have more data. It's still, how do you slice it? What is the question you're asking? Once you get the data, what decision are you making with it? And so I do feel like the difference is much more in the enablement almost of the best operators versus replacing how they operate.
Totally. I think the best operators probably are getting up to 30% efficiency gains on the work that they're doing, using AI as a thought partner, using it for creative brainstorming. I think I've actually found more AI errors recently, as in like, you feed it some data and I've double checked that the data is clean but it's coming back as incorrect analysis. So that's a little bit concerning. But yeah, I think definitely some efficiency gains, but not the like order of magnitude shift that maybe some were predicting.
Are there any tools that you yourself as an operator are leaning on that are interesting?
I don't have a very interesting answer here. That is like, it's still mostly chat. I use it daily throughout the day. Again, mostly from a thought partnership standpoint, which is like a little bit dystopian because, there's just less, sometimes I'll go to a team member. Well, previously I would go to a team member or my business partner and say, hey, like, can we talk, let's, go for a walk. Let's talk through this. Now I'm like, well, they're probably busy. Let me just chat's already got all the context. I've uploaded the context. Let me just talk to chat about it. And chat is obviously so positively reinforcing that but yeah, like I said, it's mostly chat throughout the day.
Kind of set it up. So the first comment is like, that's a really, really interesting question, right? It's
yeah.
It's like
this is a good way to think about it.
That's great. It's just like, wow, I wouldn't have thought of that. And I love it. I do think, look, I know it seems self-evident to you, but you're a successful operator. So the fact that you are trusting it as a thought partner in and of itself, I think is probably indicative of there being a ton of value in there, whether you're like piecing together exactly what it is or not. And I'm sure it's not just, you're not bugging your team. All right, I got a couple more. I want to keep pushing you. I want you to put on you and I decide enough with our happier lives and not running a brand. And we decide to go co-found a brand together. What are like 2 or 3 things you'd really focus on? Is it, we should, going back to your repeat purchase, we should start a subscription brand? Or is it, hey, we actually need to go hire that craftsperson who's in the factory? What are the things where you're confident in, will set the brand, like are the necessary conditions to set the brand up for the best success possible?
Yeah. A lot of them would be downstream of some of the things that we talked about earlier, what we look for. So you'd have to have like spectacular unit economics and have some reason to believe that like those unit economics will hold over, the next 3 to 5 years, which is obviously why supplements and beauty have been so hot, so investable. So unit economics, and then and for the similar reason, having that monthly or kind of quarterly usage. I think revenue quality is definitely something like, hey, this isn't just going to get outcompeted, and you're not going to get 100 entrants into year 2 if you're doing well.
Can you double click on that? Revenue quality is such an interesting framing. Some people will call it's a moat or it's defensibility, but I have a feeling you're kind of going slightly differently.
Well, I just think of revenue quality as both the functional, like how expensive it is for you to get this revenue, how sustainable is this revenue, but a heuristic is maybe like, do you have a clear reason to win here? Like, do you deserve, like, are you winning this revenue because you're clearly the best and you can articulate that? Or is it like you've found some video hook this month that's going to work on Meta, but once it saturates, you're not going to be able to come up with another one?
I love it. We serve, an incredible brand with really good products, but they are fully dependent on TikTok. And it is the spikiest business I've ever seen, where it could be nothing, 5 million in sales type of thing. And then they will have customers who do not engage at all with post-purchase retention tools. And it's like, how do you move from not at all to a little bit? Like there's work to be done there. I follow that. I also think about there are a lot of people who became arbitrageurs, right? And so they built a, 8-figure business, but the reality is like the margin profile had to been just nothing, right? They're resellers. So I follow in terms of like, is this defensible? You've kind of said the reason to win a couple of times. And again, these little nuggets are really helpful. I think, it's like a reason to believe that this company can sustain.
And then if you can have some unfair advantage, either on the supplier side or distribution side. So on the supply side, like one of the best operators that I know runs a large business in the bike space. He's got a really novel arrangement with his key supplier that where they're on the cap table. He has incredible terms. Obviously, there's pros and cons to it, but it's worked out really well for them as they've continued to scale. Supply continues to put them at the front of the line. They've got kind of special pricing, and so they've shifted a little bit of the kind of cogs and working capital onto the cap table, which I'm surprised that I don't see more of actually. Now, you need to have a highly commercial supplier that wants to back you, but I think that's interesting. And then on the distribution side, obviously there's been increase in celebrity stuff, but even if you have like other communities or audiences that you can tap in as a running start, I think can be incredibly helpful.
I love it. Yeah. The success of the watch business back in the day, we stumbled into what we called like nano influencers, which was, somebody in a random city who maybe had 30 people who thought her style was cool. And we let her make a custom watch, and then 15 people would buy it. And it was like trying to find all these pockets, very much aligned on the community aspect and the like user generated content as much as you can do it without the like big celebrity. All right. So what company are we starting? Do we land on that, or okay, we'll do this part offline.
Yeah. I think when Selena Gomez sells her beauty business, you and I will pitch her as the right next co-founders for her next startup.
Right. That's right. I like it. We're like, you probably need us. We're real good at this stuff. Man, what an incredible business. All right. I got a couple more for you. I am curious when you're inspecting businesses and you were talking about revenue quality and reasons to believe, how much does omnichannel matter when you're looking at from a diversification perspective? Or is that actually like a negative signal because it's creating too much complexity in the business? And then when you start operating with the business, how much do you think about other channels kind of going forward?
We don't like it largely because it's more so that it's out of our expertise, and we haven't yet developed the competency over the last few years of kind of having any edge there. And it certainly adds operational and working capital complexity. I know it's continue to be a vogue the last 5 to 7 years for investors to look for it, but it's not something that we've leaned hard into. We have historically and continue to sell into majors and some specialty, but it's much more of demand capture rather than going outbound.
Does that also extend to Amazon and like any channels?
Yeah, we will, again, for Amazon, it's mostly demand. I mean, in fact, that's not entirely true. I would say that like, we look at tacos, and if it produces similar contribution margin to Meta, then we'll go up to that limit. And so I'd say Amazon is the one, certainly is a channel that we'll expand to and see if there's efficient customers there. But yeah, physical retail distribution is not something we invest typically into.
I won't pitch you on a pop-up store company next. All right, 2 more for you. Turns out Black Friday is coming soon. Putting you on the spot. Any big advice that you have for the operators out there to be thinking about either in the run up to BFCM or kind of in the post holiday season, getting ready for 2026?
I think for most, I don't know that I've got any tactical marketing. It's more to encourage people to plan their sensitivity forecast, that if they don't hit their plan, how will the ensuing softness the following 4 to 12 weeks weather? I think that like we are certainly of the view that the median Shopify business is not that healthy. So speaking to that audience, making sure that if they have a softer, I hope that everyone doesn't, but if they do have a softer period, what are the 1 to 3 mitigants that they need to be doing in the second half of December and through that winter period?
That's really wonderful advice. Thank you. We are working on a very big partnership, and I've modeled everything out, and our CMO keeps telling me to test out both ends of the like assumption spectrum. What if you're wildly successful? What if you're not? How does it work? And I think it is extremely difficult when you're playing with the Excel and you know your business inside and out and you've seen Holiday a dozen times and all of that. So thank you. All right. Last question. Where can folks find you?
Yeah, I'm pretty active on LinkedIn, pretty active on X. Search my name, I'll come up. And yeah, if you're a brand that just wants to talk shop, especially if you want to talk about or hey, I'm in a turnaround situation, what are best practices? Yeah, please reach out. I'm always happy to jump on.
Fan, this is a real pleasure. Tuesday, 7:00. My girls are great. You're just going to feed them, tuck them. It's fine. I'll promise to be home by 11 for you. Seriously, man, I got a bunch of notes and I wish you and I talked about it a decade ago when I was in the middle of that experience. So I think
we could have saved each other a lot of time and pain for sure.
I know, man. But you're doing very important work. And I appreciate just candidly how much advice and how willing you are to. Thank you for sharing your time right now as well.
Yeah, no, Aaron, thanks for doing this. So helpful for the ecosystem to have folks like yourself, putting the time in. So yeah, really appreciate you having me on.
Cheers, fan.